Barrick Gold, is this a stock you should buy right now? That's what we're going to try to answer here in this analysis video. I like to simplify things, and I'm going to discuss 6 metrics in this analysis: earnings growth, PE ratio, dividends, return on equity, free cash flow, and intrinsic value. They're then put on a 0 to 99 grade scale, so it's easier to visualize the different numbers I'm going to throw at you in this video. The first 5 metrics mostly deal with how good of a business we have. No point investing if it's an undervalued piece of crap. That's why I save intrinsic value near the end. Earnings growth is by far the most important metric. A company that doesn't grow doesn't survive for long. Barrick has a great growth rate at 16.87% per year going forward. Here's a stock in the prime of its growth stage with a bright future. For PE ratio, most people look at it as a valuation metric. I don't base my intrinsic value on the PE ratio. The PE ratio to me is a measurement of hype. Too much and there's just too many eager eyes on the stock. Too low and we might have a hidden gem. Barrick has a disgustingly high PE ratio at 269.55. That growth isn't looking too good with way too much hype around the stock. Dividend should be an obvious metric and something a lot of people ignore. I'm going to put it out there. If you buy a stock that doesn't pay you anything, you're speculating. You're not investing. Barrick has a good dividend yield at 2.43%. It better pay something nice for how much hype is surrounding this stock. For return on equity, it tells me a lot about the management. It shows me how efficiently my investment dollars will be treated if I were to buy the stock. Barrick has bad management with an ROE of 0.5%. The money you would be investing will either go to waste or be used to pay off earlier shareholders. Free cash flow is my way to quickly evaluate how dominant of a company we're dealing with. The more cash available, the better opportunities to buy up more companies, the better to research, and more money for marketing. Barrick has little to no cash flow to the tune of $430 million. This tells me not enough money is coming through to make expansions and growth sustainable. Okay, as I said, those 5 metrics we just went over tells me what kind of business we're dealing with. With a business grade of 48, we're dealing with a below average business, good growth and a nice dividend, but way too much hype and bad cash management. But before we get to intrinsic value, consider joining my Patreon and get access to every grade from every company I've analyzed. It's updated all the time. Go to patreon.com/GrowthShares or click on the link in the description. As I said, Barrick is a whatever business, but let's see what the price tells us in terms of stock attractiveness. Nonetheless, Barrick Gold is worth $14.31 per share. Right now, we're looking at an overvalued stock. This wouldn't be a good time to buy. And now that we've got all the numbers down, we need to put it all together and get our final grade. Barrick Gold has a final grade of 46, and that makes it a below average long-term investment. For me, the price is not great and its stock price reflects that. I'd hold off on buying. If the price drops a lot, then maybe. But hey, after this video goes out, anything can happen in the next few days, weeks, months, even years. Long-term is always longer than you expect. Keep this in mind. It took Warren Buffett 45 years to become a billionaire. Invest wisely, and as always, take care of your money.